Hello and welcome to another update video about ADA. Yeah, ADA continues to be in this sideways range. It's just in a range, okay? And I've got the next upside target highlighted here with this flag on the chart, but there are certain conditions that need to be fulfilled to keep this a valid and relevant target basically. So let's talk about that in this video. I continue to see the rally from the June low last year to the March highs this year as a 5-wave pattern. I see this as a leading diagonal in wave 1, and the current pullback is currently seen as a wave 2. When do I change my perspective to something more bearish? Quick explanation: a wave 1 to the upside is a first 5-wave move, indicates where the trend is going. And the pullback is characterized as a wave 2. That's a 3-wave move after 5 waves to the upside. If we get a 3-wave pullback, well, that indicates an uptrend, because if after 5 waves up, 3 waves down follow, just by very definition, the uptrend is sort of likely going to continue. And there are certain additional levels that we can watch in addition to just the Elliott wave, let's say labels and structural support levels. We can use Fibonacci support, and these are very, very relevant in Elliott wave. And this wave 2 area is defined between 29 cents and 49 cents, whereas normally we like a wave 2 get normally minimally to the 50% Fib level. And that's in this case at 42 cents, okay? 42 cents is the 50% Fib level, and however, I normally show the 38.2 Fib level as well, because, for example, Link reacted to that, right? Link reacted to that, and the 50% Fib level is normally the ideal one, the first ideal one. It's just that, in a bullish market, sometimes pullbacks are shallow. You can't really tell exactly where it's going to land. This is the volatile crypto space. So we normally give a range, but then we can identify microstructures, and based on those microstructures, we can then make a call to say, okay, it is more likely that we go down one more step on the ladder to the downside, or maybe two, or we've got already bottomed. So this is the only purpose here, is to have some levels to watch. And then in addition to that, we are tracking the microstructure. And when, for example, there's been a reaction to the 42 cent level, like in this case, the 50% Fib level, and the reaction is quite substantial, and we see the next smaller time frame and smaller degree 5-wave move to the upside, well, that would be additional information that we've actually bottomed. However, at the moment, as you can clearly see, there is not really a substantial reaction. In fact, the price is respecting the Fib levels, absolutely, but we're sort of oscillating here, around or between these two Fib levels, actually up and down between the 50% and the 38.2 Fib levels, between 42 and 49 cents. We just need a breakout of the range. One more low is definitely very, very likely, but it takes a break below 2 levels to confirm that. First of all, if one more low forms in this correction, then wave 2 is obviously still unfolding, and it would be a large A, B, C structure, and the C wave includes a massive wave 4. If one more low forms, then the downside target would be between 36 and 38 cents. This would be sort of the next main cluster of Fib levels, but it takes a break below 2 levels to confirm that this is happening. The first level is at 43.6 cents. That's the 78.6 retrace level of the last rally. That already shifts probabilities further to the downside, but then to confirm that further, we need a break below the red line, 42 cents. This needs to be broken next. That's why I've got this arrow there. And with those levels, if they break, then this confirms that we should see another low into that region, and then from there, the market could attempt another reversal. For now, we're just moving between an upside breakout point and the downside breakout point. To the upside, the next level to watch to the upside is at 52.2 cents. Well, the last swing high is at 51, so let's say 51, then 52.2 cents. Breaking above those will increase probabilities for the orange scenario. We're currently holding above micro support still, but it really is like 50-50, right? I'm very open to the idea the low could be in, but definitely the analysis at the moment tells us that one more low is definitely still likely. And it's just a matter of understanding the key levels and when the larger degree thesis will shift towards something more bearish. But at the moment, it's not the case. And if the orange scenario is unfolding and the wave 2 already bottomed, then we need to see, to confirm that, first of all, a break above 52.2 cents, but then eventually 5 waves up that reach 65 cents. If that's the case, then we can say wave 2 bottomed. After these five waves have formed, we should see a 3-wave pullback afterwards. I can give you another support area for that. So it's all about understanding the key breakout points and then having the levels to watch in each direction after the breakout. I think it's worth, if you're trading the longer time frame, then obviously you've got the yellow support region to position yourselves. If you're trading the smaller time frame, you have the breakout points and the invalidation points. And yeah, so hopefully that helps. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.